Hey guys, it's James and we are back for week 2 update for the 2022 M1 finance battle, where I compare REITs, covered call ETFs, S&P 500 ETFs, and Nasdaq 100 ETFs, and I see how they perform on a weekly basis in 2022. And over the past week, we have lost $7, which is a total negative return of 0.69%. So let's go ahead and go over to the spreadsheet and see who held steady and who was the biggest loser. So overall, here are the totals. We started out with $1,000 January 1st, and then the portfolio value dropped about $40 in the first week, and then it's dropped on another about $6 to $7 here the second week. And the covered call ETFs remained flat this week at 247.71, and they still are in the lead over the other 4 categories. And you can see that big drop from the Nasdaq sell-off when the Fed said they were going to increase the interest rates. There's a big drop off with those overpriced tech stocks, down from 250 down to 229, but we did not slide that much in week 2. I would say the worst loser in week 2 was the REITs, going from 239 down to 234, losing the most overall value. Covered calls and the S&P 500 remaining relatively flat, not losing as much as the other 2 categories. Before we look at each individual stock, we'll go ahead and maximize this. Take a look at each individual stock and see how each individual stock performed. And if you're new to this series here, in each category, we have 5 stocks. So we bought $50 at the start of each stock. So we have 20 stocks total, in 5 in the REITs, 5 in covered calls, 5 in the S&P 500 ETFs, and 5 in the Nasdaq 100 ETFs. So in the REITs category, Welltower, ticker symbol WELL, lost very little value, but it is still in the lead, and I believe it is the only holding that I have in the entire portfolio that is actually gained from the start of the $50 investment. It's gained 83 cents. We take a look over here, and the worst losers were AMT and DLR. AMT and DLR are in the tech space, and tech has been struggling here the past few weeks. Come down to the covered calls, and PBP is continued to stay in the lead, even though it has lost even though PBP has lost a little bit from the initial $50 investment, it still remains the highest fund, but only slightly. As we can see from our total graph, the covered call ETFs here in red, the covered calls have not lost as much compared to some of the other sectors or other groups in this current 2-week sell-off that we've had. Come down to the S&P 500 ETFs, and well, it looks like we do have another fund, VOOV, that has continued that is still above the initial investment of $50. VOOV and ticker symbol WELL are the only ones that are over the initial $50 investment starting January 1st. And over here on this graph, you can see IVV, SPLG, and SPY are pretty much the same fund, and they are tracking very similar with the growth stocks, which, if you remember, VOOG has about 40 to 50%. I believe it holds about 40 to 50% tech stocks in it. And then the biggest loser in the first part of this year is the Nasdaq 100 ETFs, with the triple leveraged fund TQQQ taking the absolute bottom trophy. It continued to slide compared to week number 1. And in week 2 for the Nasdaq 100 ETFs, QQQM and QQQ actually tied. And here is just an overview of each and every one of the 20 holdings that I have in this M1 finance battle, with the REITs having an extremely low expense ratio with an average growth rate and average dividend yield. Covered calls highlighted the dividend yield is their strong point, and the Nasdaq 100, their strong point is their overall growth over the past 1, 5, and 10 years. With the S&P 500s being the steady Yeti as it is, with a modest expense ratio, modest dividend yield, and regular average growth. So that's it for week 2. Head down into the comments, let me know what you thought, and I'll see you next week.